Hello everyone, Dave Landry here from DaveLandry.com. Once again, I am super excited about stocks and I'm also super excited about crypto. So let's dive right in. Let's talk about Landry Light and the S&P 500. As you know, S&P has been in a fantastic trend for quite some time. A simple little indicator, or as I like to call them, illustrator, will help you to see that. You could also obviously eyeball the chart, but notice that the lows have not touched the moving average for a long, long time. This is illustrated down below. The reason I call it illustrated versus indicated, or an indicator, is because, as I preach, indicators don't indicate anything. They just show you what's already in the chart. And as always, you need to look at the chart to make sure it confirms. And you can see very, very nice uptrend so far remains intact. One thing I'm amazed with, and the 30 EMA has become my favorite EMA. I used to really be into the 20 EMA. Now I'm in the 30 EMA. I know you want to party with me, but it's now one of my favorite moving averages, and I'm amazed at how much trouble it can keep you out of. And everybody's all excited about buying markets, but the bottom line is you need something to kind of help to keep you from buying them when you shouldn't buy them, okay? So not trading a lot of times is more important than trading. And as a general statement, you want to only buy markets when they are above the 30 EMA, and that goes for any markets. But you can see nice Landry Light. So far, we've had 94 bars of Landry Light. That's pretty amazing. And this little illustrator down here just counts the number of bars, not the magnitude. It's not measuring the distance or anything like that. There's other indicators for that, which may or may not be of value. They're something that I don't actually use, so I don't know. So you're on your own on that. Years ago, I tested everything in the world, and I just came back to simple stuff like moving averages and Landry Light and bow ties and such. Speaking of simple, the TFM 10% system, very simple system. TFM stands for Trend Following Moron, one of my nicknames. I wasn't very flattered when I was first called that, but I've grown to love and embrace the name. Got the hats, the t-shirts, the buttons, the whole 9 yards. Anyway, here's the TFM 10% system. The thinking here is once the market gets 10% away or more from the 50-week closing high, it tends to be in trouble. When things get bad, they tend to get worse, is my thinking. And borrowing a term from Ian McActivey, you want to try to avoid those diaper change moments. Like right before the pandemic hit in earnest, we got a sell signal, so we got out of the way in the overall market. Now, your individual positions, just allow them to stop out, and every now and then you get surprised. Maybe you're in something like Academy Sports or whatever that does really well when the COVID is in full force. One of my clients, a gentleman named Jeff, pointed out that he tends to get out of the way when the market is right around 5% or more away from that 50-week closing high. And I looked at that. You're going to get a lot more whipsaw, but it will get you out a little early. The good news is with this system, if you're following it even at 10%, it would have gotten you out of every bear market in history right before it began to develop in earnest. So again, we're trying to avoid that diaper change moment, which is an Ian McActivey term. There's a sell signal rules. A weekly close has to be 10% or more away from 50-week closing high, and a close below the 50-week moving average. Now, I know I'm going through these rules fairly quickly. I've talked about this quite a bunch on the channel here for Stockcharts. You could also go to my channel, youtube.com/Dave Landry, to learn more about the system. Anyway, we did have a sell signal right here, and the market went straight back up. Now, the buy side signal is a little bit more stringent. You need 2 bars of upside Landry Light, and you must close within 10% of the 50-week. So again, this zone down here is a 10% zone. This is the greater than 5% zone, and this is the 5% zone. As a general statement, as long as you're in the green, the market's doing fantastic. When it's in that pink zone, be a little cautious, but longer term, it's probably still okay. But once it gets 10% or more away from the 50-week moving average, again, you need to really think twice about staying in the market. So buy-side signals are a little bit more stringent to help avoid whipsaw. And speaking of whipsaw, we did get a whipsaw signal here. As you can see, we got a sell signal. And then 3 weeks later, we got a buy signal. It happens, spelled with a silent SH. As I quote quite often, as Greg Morris says, whipsaws are frustrating, bear markets are devastating. You can survive frustration. And you will have whipsaws no matter what type of system you're following. It comes with the territory. By the way, if you try to design a system to get rid of all the whipsaw, what you have done is perfectly curve fit your system to the past data, and I guarantee you the future data will not be anything like that. So be careful with that. And that's why this system is called the trend following moron 10% system. Just my idea was just to keep it as simple as possible. Here's the Qs, there's the zones, as you can see. I did the quick back test of the Qs and I realized that they worked fairly well. I saw this signal setting up and I said, you know what, just for S&Gs, I'm gonna go ahead and take it. So as you can see, way back last April, geez, I've been in this thing almost a year, that's crazy. I didn't realize that. I said, well, let me just take a token amount to say that I'm following the system. You know, by the way, as I say quite often, I'm not a mechanical trader, and as you'll see in a second, it is hard sometimes to follow a mechanical system. But these systems can quantitatively tell you whether or not you should be in or out of a market, and then you could use a little discretion to decide whether or not you want to be in or out from there. As a general statement, if I am holding a longer term holding, which I don't do often except in more recent years, something like the Qs, then I will get out on a sell signal. Anyway, so just for SGs again, I decided to take the signal. And you had 2 bars of Landry Light down here, so the buy would be there. I got in right before the close, so it's 319.49 was my entry. And then based on the mark-to-market a little while ago, it was 439.11. So that's 119 points, which is beginning to add up a little bit. So that's 11,962 in profit. Now, one of the scary things when you're following a longer term system like this, a trend following system, is your drawdowns can be pretty steep. And you can see the sell signal will be down here below the moving average, which is well below the 10% line. Now, the moving average, by the way, is catching up fairly quickly due to the drop-off effect. We're dropping off 300 and change prices, and we're adding in mid-400 prices. So that's going to begin to catch up with price fairly quickly. But anyway, the point I'm trying to make here is that if you're following a system longer term on a mechanical basis, especially longer term trend following, then your drawdowns are going to be pretty steep, because in a case like this, if it went all the way down and stopped out, that would be over 60 points. So you give up half of these open profits, about $6,000. Now, I hate to use the word hope, but hopefully the moving average will continue to catch up, and then the price will continue to trade higher for this particular system. So I don't really follow things mechanically. Again, I'm just doing this one system here with the Qs just to see for S&Gs what would happen. And the map is not the territory, as I did a little video on not that long ago. It's on my YouTube channel. Again, youtube.com/Dave Landry. And one of the things you don't realize when you're doing all this little paper testing and stuff is that, well, hang on, it's pretty hard to hold this thing for a year and then be willing to give up half of your open profits. Not to digress too far, but keep in mind that I am a swing to intermediate term trader. I will hold positions longer term, but I use discretion on selecting my stock positions, and then there's a lot of discretion used in the management of that position. I have plenty of videos on that. Anyway, let's shift gears and take a look at Bitcoin. Bitcoin looking pretty good. It's a Landry Light pullback. Again, the Landry Light doesn't indicate anything, but it does alert you to the fact that the market may be trending. So you can see nice Landry Light in Bitcoin. What I like about this particular setup is that notice that the trend accelerated, and that's one of the things you want to look for in the Landry Light pullback. Let's say you got a Landry Light pullback, but the market kind of dies out, even though it's still above the moving average. That's a market you want to avoid. However, if it begins to accelerate and then has that pullback, then you might want to take the setup. For instance, back here you can see, even though you had lots of Landry Light, notice that we began to stall out, even though the Landry Light continued to climb. So this is a market on a net basis that went sideways for 4, 5, 6 weeks. You probably don't want to trade that Landry Light pullback, but something that looks like this, where the market is accelerating higher and then there's a nice little early pullback to the 30, that might be worth a shot. So a plausible entry, maybe about 70,000, fairly liberal entry to keep you from getting triggered on noise alone. Maybe a stop right below the low or a little bit away from it, about 60,000 or so. And then if you broadcast that up based on the money management And by the way, if you watch my Trading Simplified shows, you'll get a lot of that money management too, which are on the Stock Chart channel. Anyway, based on that, you'd add 10,000 to 70, about $80,000. So those are rough parameters if you were to take a trade like that. And by the way, it's a good thing. It's usually a good thing when Bitcoin is rallying along with the overall market. Years ago, I was kind of hoping that Bitcoin could be something that you could buy independently of the market, but it does tend to have a fairly strong correlation to the S&P 500. Now, staying on crypto just for a second, notice that Ethereum, nice uptrend remains intact there. And you've had Landry Light for a long, long time. It did pull back to the moving average and a little bit beyond, which is okay. Remember, in general, we don't buy markets below the 30 EMA. So in a case like this, your trigger would be well above the 30 EMA anyway. But nice pullback there. Another thing, too, again, make sure you look at the actual chart and not just the indicator or illustrator. Notice that there's lots and lots of persistency. That means the market has a tendency to go up day after day after day. Persistency is one of the most amazing things out there. I think if you start studying persistency, you're going to be amazed. And just trade markets that have some sort of persistency in them, and I think you'll do just fine. And you'll certainly eliminate a lot of bad stocks. So again, persistency, the market just goes up day after day after day. Mathematically, it's equivalent to linear regression. I just like to draw a line through as many bars as I can and see how many I can intersect. In a case like this, nearly all of them. And if I drew my line a little straighter, maybe all of them. Okay, let's talk about Landry Light pullbacks in altcoins. Markets are markets. I'm going to show you a Landry Light pullback or a close to pullback in the semiconductors. Here's one in an altcoin. I am already long this coin. And if you go and watch the last year daily 5, you'll see another one that I bought based on just a breakout, and this is another one of those type of trades. Now, I'm not a breakout trader. I don't want to back too far into that, but I'm not a breakout trader as a general statement. But if a market is really, really going straight up like the altcoins were at least a few weeks ago, then you could just buy the ones that are making new highs. And we talked about that in the last daily 5, so check that out. But anyway, nice accelerated trend here, and it's begun to pull back. Now, keep in mind, I trade other things other than Landry Light pullbacks. So for all intents and purposes, this would be a pullback that I would look to trade. I am already long again, but I was just looking at it a little while ago, right before I went live. I threw in this chart the last minute because I liked it. It's a good-looking pullback. And notice that it did accelerate higher before it pulled back. All right, let's get back to stocks. The SMH, the Semiconductor ETF, is close to Landry Light pullback. It's a pullback. I think it's worth a shot. But you can see that we've had lots and lots of Landry Light, 51 days above that 30 EMA. Nice uptrend. Always remember to draw your big blue arrows. I'm known for those big blue arrows. And when the market's in an uptrend like this, the shorts tell me where to stick those arrows. But that's okay. Anyway, you can see a nice little pullback, almost to the 30. That's a good-looking pullback there. That's a good-looking market. Like I said, in the last year daily 5, I'm a huge fan of having the semis confirm the overall market action. And I think you should keep an eye on the semis and use that as a gauge for the overall market as a general statement. I want to thank everybody for watching. If you need to contact me, here's all my contact information. I do answer all comments. If you comment on the Stockcharts channel, it's a little harder for me to find that, but I do try to keep an eye out for those. I don't get an alert. If you comment on something on my YouTube channel, I'll get right back to you because I'll get an alert on that. You could also reach me directly. I do have a group in Facebook. You do have to be at least a gold member of DaveLandry.com to participate. Well, that's it. I want to thank everybody for watching again, and may the trend be with you.